Good morning, ladies and gentlemen. What's up? What's going on? Y'all cannot see me inside of chat. Give me 1 second. I don't even know what I'm doing today. Don't know what I'm doing. Probably just running on, probably an hour and a half of sleep. And we are good. All right, let's do a quick little mic check inside of chat. Make sure you guys are all good. But good morning, everybody. How's everybody doing? How's everybody feeling? You guys pretty excited to rock and roll today? Because I'm excited. Rock and roll. We got through CPI data. We got the market moving a little bit. And so, hey, I think today we're going to see some really nice opportunity in the market. We can definitely take advantage of it, crush it, make it happen, and hopefully lock in some big time profits. So we're going to dive into it here in a moment. But before we do so, hit me with a big old good morning. If you guys are inside of chat and if you guys are in the Zoom and you feel up to it, open the mic and scream good morning if you want.
Good morning.
There it is. I love it. I love it. But everybody else, good morning again. Happy hump day. Craig, Andy, Zach, Jonathan, Patrick, Stir, Christy Q, and everybody else. Again, good morning, traders. Let's dive right into it. Let's talk about what we got going on for today. We're going to break everything down, give you guys a complete market overview, plans on our top stocks to make sure you guys are all set, ready to rock and roll for today. Now, we will have time to review some of your stocks as well, so go ahead and get those typed up inside of chat. Over in the Market Mastery room, we will review those before market open. Make sure you guys are dialed in for the day. All right, so let's go check out the economic calendar. As you guys know, this morning, 8:30, we had CPI, and CPI data came in right in line with the forecast, but when you take a look at inflation year over year, we actually came in a little bit lower than the forecast. We came in 0.1% under the forecast at 2.9%. Everything else was in line this morning. Again, seeing a pretty neutral reaction. And the reason we're seeing a very just kind of neutral reaction, not a massive spike up, not a massive dump on down, is, good inflation data was, in my opinion, already priced in. That we were going to come in line with the forecast. And so that's why, again, you're seeing more of like a neutral reaction. You're not seeing a 5-point rip to the upside or some massive 5-point drop to the downside. All right, but CPI is out of the way. What do we got coming on up here? 10:30, got some more data. It's a medium importance, not really a market mover. But 10:30, you got EIA crude oil stocks change coming on up. All right, so you're pretty much in the clear for the day. Let's go talk about the SPY and the Qs, break those down, get you guys dialed in. And we will go from there, ladies and gentlemen. So, starting on the daily, couple things that I want to go ahead and get marked up, right? I want to go ahead and mark up a zone against yesterday's close and yesterday's high of day, right? We had a nice gap up yesterday. Pretty strong push, right? And a very strong close near high day with an uptick in volume, right? This could lead to a second day of upside continuation because we will, right now at this point in time, be gapping up. Okay, so if we actually gap up above that zone that was created, again, just off yesterday's close and high a day, we could pull back into that zone, hold it as support, and then rip to the upside and see a second day of upside continuation as long as we hold that zone off yesterday's close and high a day. So that zone here is going to be between 542.04. Let's go ahead and readjust that. 542.04 up to 542.28. That's going to be our line in the sand for today, guys. Okay. Bottom zone of daily support is going to be down here between 536.98 to 537.48. Next zone of resistance here on the SPY is going to be up here between 547.05 to 547.61. So you got three main key zones to watch today. We got that lower zone down here, once again, between 536.98 to 537.48. We have our line in the sand. That's between 542.04 to 542.28. And then our next daily zone of resistance up here between 547.05 to 547.61. Those are the three main zones that need to be on your charts for today. I also want to go ahead and mark up the close here from August 1st. The close is at 543.01. Why do I want to mark that up with a line? Well, that is a gap level, right? So we were looking at this gap to get filled. Gaps can get filled from wick to wick. Sometimes we fill the gap from a body to a body. So I want to go ahead and mark up that candle body, which is the true top end of this gap. So if we see a lot of resistance forming and we truly can't break above 543, you could see a gap fill rejection. You may not hold yesterday's high and close as support. We may fall below that level as well, see some downside. So watch that 543.01 today as well, and let's see what happens off that level, because that is the top end of the gap up against that candle body. And you already see a lot of resistance in pre-market right at 543. So let's go ahead and build a couple game plans, guys. Okay, because we know we have this line in the sand that could be some really nice support. We also know the top end of the gap is going to be some pretty nice resistance. Let's go ahead and build some plans here. If we cannot break 543.01, the top end of the gap, and we see it get rejected, I'll be watching the SPY down at that line in the sand to see what happens. Right? One of two things are going to happen. Number one, we're going to hold it as support and see an opportunity to get long, and then most likely break the top end of that gap and possibly continue higher up into our next zone of daily resistance. But if we get rejected off the top end of the gap and we come down and also crack below and fall below that line in the sand, I just want to see it back test as resistance. If we see that crack and retest after getting rejected off the top end of the gap, I'm going to be very, very, very interested in getting short down to that lower zone of support. Okay, so those are going to be two game plans based on the line in the sand, right? If we hold it to support, we're looking to get long. We fall below it, stay below it as resistance, we're simply looking to play the market short today. Okay, but if we see the SPY never come back down to that line in the sand and we break 543.01, which is the top end of the gap, and we see that level or close to it holding as support, that's also going to be an opportunity to get long here. Okay, so that's going to be your third and final game plan. Now, Josh, would you get short right here off the gap level? I may consider it, but you're just you're looking at that maybe 75 cents of downside. Right, even if we open here, pop up to 543.01 and get rejected, where's your next level of support where you would be looking to take profit? That line in the sand between 542.04 and 542.28. So you're just kind of limited to the downside, especially if that area does hold as strong support. But you could capitalize on it, get about 75 cents to $1. So that's, that's an idea. That's definitely something that could be tradable. If you open, come up to the top end of the gap at 543.01 and get a proper rejection, we could look to take it short down into that line in the sand as a first target. And then if it holds and starts to push, we can just get out of that trade overall and then look to flip long. But if we crack below it and keep dropping, at least you have a pretty nice entry up against that gap level. So keep that level on watch. If we can't break above 543.01 at the start of the day, you could short it down into that line in the sand. Okay? And then we have our two game plans established off that line in the sand as well. Okay? So it's a very simple day. There's that one key level that we really want to keep on watch. That's our make or break. We hold above it, we play the market long today. We fall below it, stay below it. We're looking to play the SPY short today. And again, 543.01 is the top end of that daily gap. Okay? If you have any questions about the SPY, let me know, and we can definitely pick it apart, break it back down. Well, let's move on to QQQ. All right, let's talk about what we got going on with the Qs. We're going to do the same thing we did with the SPY with the Qs. We're going to go ahead and mark up yesterday's high a day and yesterday's close with a zone, and that gives you a zone here between 462.58 to 462.85. That's going to be our line in the sand for today, right? Gap up yesterday, strong push, strong close, near high a day with an increase in volume. We are going to be gapping above that level today. We could see a second day of upside continuation. So if we gap up above, right, that line in the sand, we hold it as support, we could see a second day of upside continuation, right? And where would be our next daily zone of resistance? It will be up here between 471.13 to 471.80, right? And then your daily zone of lower support will be down here between 455.63 to 456.04 here on QQQ, right? And it really just comes down to the line in the sand on the Qs. That's your make or break. So you got two game plans for today here on the Qs, right? It's all going to be based on that line in the sand. So looks like we'll be opening above it. If the Qs pull back and hold that level of support, I want to play the market long, expecting that we get that second day of continuation to the upside. Where to? Our next daily zone of resistance between 471.13 to 471.80, right? But if the Qs fall below that level and retest it as resistance, that looks really good for a short. And then I would look to short the Qs on down into that daily zone of support between 455.63 to 456.04 here on QQQ. Very simple stuff. I like these days. I like when you have one key make or break level and you're close to it, right? And you have some distance from zone to zone in a market that can move from zone to zone with ease. So I definitely like the opportunity that we have for today across the board. I do actually like the Qs a little bit more than the SPY. I will say that. I do like the Qs a little bit more than the SPY as far as location and, you know, what we see. So I will be putting more of my focus on the Qs at the start of the day. We'll go from there. But you guys are all set with the SPY. You guys are all set with QQQ as well. And I think today's going to be a day packed full of opportunity. I really do. Moving on. CRWD is on watch today. There's two different ways that we can trade this, right? We're inside of this daily gap. Bottom end of the daily gap is at 248.34. Top end of the daily gap is at 257.43. There's two ways to trade this today. Number one, if CRWD opens and comes down to the lower end of the gap first, if we hold it to support, we can play this long up into the top end of this daily gap from 248.34 up to 257.43. This would be a gap fill long. We broke inside the gap. If we pull back and hold the lower end of support, we're looking to play CRWD long up to the top end of the gap. Now, second way to play this is going to be a gap fill rejection. Now, the gap fill rejection, if it sets up properly, I'm not taking Friday expiration. I'm shopping 6 months out. Why would I shop 6 months out? Because I think this could be a great day trade opportunity to lock in some good day trade profits, but then be positioned accordingly to hold some of that as a runner for the next few months, as we may have some downside into the down into like the 170s, right? Into that, that daily zone of demand. So if we come up and fill this gap today and we see a gap filled rejection, I want to short that intraday as a day trade opportunity. Secure some profits with the goal of being able to get, sorry, give me one sec. With the goal of being able to secure some great profits, right, to where I can hold the remaining position as a swing trade with little to no risk. That's the goal, and be as little risk or no risk as possible for that 6 month long swing trade. So that's where my head is. So if we come up and fill the gap today on CRWD at 357.43, right, I want to be looking at some longer dated options, because this day trade could very easily turn into a swing trade as well. We see that gap fill rejection. I want to get short with a target today down at 248.34. Okay, and then if we see continuation to the downside through, say, like tomorrow and the end of the week, I think in the coming months, we could see CRWD come all the way down towards around this 174.73 to 179.80 region. Okay, so I just definitely want to be positioned on that correctly. Now, would I take longer dated options for the gap fill long? I would not. Those would just be some shorter dated contracts. I would look to take that just on up to the top end of the gap today. But the gap fill rejection, if it sets up properly, I definitely want to be positioned with some longer dated options, because that day trade could very well turn into a very awesome swing trade as well. So definitely keep CRWD on high watch today. And then maybe Airbnb. I don't know how I feel about Airbnb here. We're inside of a gap, so I just kind of want to watch Airbnb today to see, do we have any opportunity to trade this long for a gap fill long. So bottom end of the gap is at 115.52. Top end of this gap is at 122.09. If we see Airbnb coming back down to the bottom end of the gap and holding it as support, we could look to play this long for a day trade that could very well turn into a swing trade up to that 122.09. And then if we ever see Airbnb filling the gap, right, we could definitely look for a short opportunity for a possible gap fill rejection at that point in time. But like I said, I'm like 60-40 with it. I think there's better opportunity out there. I think CRWD looks 10 times better than Airbnb. And I love where the SPY and the Qs are at for today. I think there's going to be some really nice opportunity with the SPY and the Qs. So Airbnb, a little bit of a back burner, but I will periodically look at this throughout the day to see if it's providing us with any opportunity. But for today, we got CrowdStrike, CRWD, QQQ looking pretty good as well, and the SPY. You guys should be all set, ready to rock and ready to roll for today. Why don't we get the intro music in the Zoom? You know, it's a good question, man. I would say watch the intro in Market Chatter and then boom, jump into the Zoom, baby. Tom says, we're not worthy. I just can't pump that through to you guys. All right, so you guys all set? You guys have any questions? We do have 13 minutes until market open. All right, if you have any questions about the SPY, the Qs, or crowd, let me know. We can review those. If you have any other stock you want to look at, bring it to my attention.
You're all spoiled with the music. We had the same 6 songs on repeat for like a solid year. Guys, enjoy the music, man.
Yeah, it was that one playlist for like 2 years.
It was a good playlist.
It was, but it got a little old after 2 years.
Hey, Josh.
What's up, buddy?
Not too much. How you feeling?
Tired and uncomfortable. That's
I
it.
can see that.
Yeah,
That's expected.
it's
He
expected.
found another
Just
reason not to go to
uncomfortable
the
and just
gym.
I didn't sleep good last night.
I know it'll make you feel better. A nice one and done today.
Yes. Oh, nice one and done. We could wrap it up, and I'm going to go take a nap, which I can't do that actually because I have a full slate of calls today. So I'll be working all day. But,
So
yeah, nice
I'm
little one and done in the
watching-
market. Count me in.
Got that ice pack handy?
No ice pack. No, they said we don't do the ice pack thing. If you want to make you feel better, go for it, but it's not a part of their recovery process.
I was given a bag of frozen peas.
Were you? They just gave me some extra strength ibuprofen and said just take it easy for the next 24, 48 hours. Don't do anything and don't exert energy. I'm like, okay.
Yeah,
Cool.
I was told no gym for like a week, and
No
then I
gym
could
for a
ease back
week.
into it.
Yeah, which sucks. I was just starting to really gain some momentum with fitness. So now it's a week and not being able to go, but I'll do some mild exercise, maybe just strength training without putting a lot of, stress on that area. But yeah, they just said take it easy. Yesterday it's painful when the stuff wore off. It was just very painful, very uncomfortable, but I feel good. I'm just lack of sleep today.
He said he did it not to have any more kids. The real reason is he wanted a week off of the gym.
It's the real reason I wanted to be gone from the gym. Yeah, that was my excuse. Yeah, $700 for a vasectomy just so I don't have to go to the gym for a week. Fuck yeah.
No, but
Yeah,
maybe
we're
like
good,
some
man.
light stretching. Like definitely don't push yourself too far. Me and Corey were talking about this yesterday, but take it easy.
Yeah.
Relax.
What I'm gonna do? Light stretching, go out, walk, get some sunlight, just take it easy, slowly kind of get back into things. But yeah, I'll be good, man. It was easy, it was painless, it was quick, man. It was good.
So I'm resurrecting an old name, recent name, Schlumberger, SLB.
SLB. Let's go look at SLB. Schlumberger or Schlumberger. All right. So, do you see anything that stands out to you?
I mean, I'm just looking at there. It certainly has a base. If you
Yeah.
go back at this particular level, maybe not exact, but pretty close. I
Yeah.
also like it for negative reasons, but I like it because of what's taking place, in the Middle East with Iran and Israel, with the threats going on.
Mhm.
And I look at it, there looks like some consolidation going on down here in the last week or so.
Yeah, I mean, you're coming down into that recent base that we found around like 4270, but building lower highs into it with multiple touch points. Typically, we see the drops below. When we find flat support, but we're building those consistent lower highs into it and tapping it with lower highs, most of the time we get those cracks and then the leg down. Just to be mindful of that. But I'm
Okay.
not saying that's going to happen, but I could already see on the monthly, we've come down to that area 1, 2, 3 different times with some recent lower highs here. Just something to be mindful of. But that's on a monthly. Let's drill this back into a weekly time frame as well. Yeah, and you got that little hiccup candle that sits right there on the weekly as well. Or the order block for like 9 years. I call it a hiccup candle. Now I learned that it's an order block. It's great, but I still prefer hiccup candle. All right, so you got that little hiccup candle on the weekly right there between 41.15 and 44.42. You got the weekly 200 SMA kind of curling up into that region as well. And we can see that weekly 200 SMA it's pretty respected, right? We're below it, grinding it as resistance. We get above it, hold it as support. So, I mean, I like the fact that the weekly 200 SMA is sitting right there up against that base inside of that little hiccup candle zone as well. But we've already came down into it here and then pushed out of it. Came down into it here, pushed out of it. It's just that level's getting beaten up. And then off some of these lower highs too, which doesn't look ideal.
Right.
But let's do this. Let's run a downtrend across these lower highs. Do that. Then let's take this one step lower into a daily and just try and tighten up a few things here. Where'd that downtrend go? It was literally just on the weekly. We'll just throw it back up on the daily. And you got a little bit of bullish divergence, not true divergence, but you see a little bit of it. You got, your base forming, but you got the RSI holding a slightly little higher low at flat bottom support. I mean, this would be a boom or bust type of swing trade for sure. It would be,
Right.
Hey, this area of support has been beaten up quite a bit here. We're building some lower highs and lower lows, coming down into that zone. We continue to see that play out. It's possible we see that longer term descending triangle play on out, and descending triangles are like short formations where you have lower highs with flat bottom support, right? And eventually get those cracks to the downside off those, daily and higher time frames, descending triangles. Like 70% of the time they lead to cracks and drops on off. So this would be like a tread lightly kind of trade in my opinion, and it would be a boom or bust. It'd be one of those things like, it's finding a base inside of some pretty solid support. You have, some confluences there as well. You got some slight bullish divergence. It would be, hey, I'm just going to take a stab at this at support and see, do we push back into that downtrend as a target? And if we fall below all that support, just cut it quickly. So I could already see some decent risk reward. And that decent risk reward may make this a decent little trade here. I mean, if you get back up at least into the 200-day moving average, right? If your entries are at that zone and you put your stops below it, it's not the best. It's about a 3-to-1 risk reward on SLB. I feel a little 60-40 with it. I see the potential, but it's a little bit riskier, being that area of support's been beaten up a lot. And the risk reward at a 3-to-1 doesn't really excite me, with just a little bit of added risk on the trade and just being a little bit lower in confidence, getting long off that zone. Now, if the risk reward was a 10-to-1, right, with everything else we discussed, I would start to justify the entry because the risk reward justifies this quick little boomer bust trade. But a 3-to-1 doesn't really get me all that excited. But I mean, hey, that's, what we could see. If we hold that 42.61 region on up, you could see it grind back up into that 200 SMA, into that daily downtrend. And if you do take that trade, stops would be under all that support. But that's all I really see on SLB. Is you got that little weekly hiccup candle zone that we've come into several times. You got that flat base of support right around 42.61. And you got some slight bullish divergence. But that's really all I'm seeing on SLB. Is there anything else that you noticed, like another confluence that, stood out to you?
No, I mean, I just like that it was holding those levels prior, and then the trend line that might be a trade back up into the trend line, and also with the potential news with, Iran and playing it off of that. Again, to your point, I was looking at it like a boom or bust type trade,
Yeah.
but seeing if there's anything else that you might see that I haven't seen.
100%.
And I was
Well, the only other thing that I see is it's grinding that 38 to extend that fib. So if we just look at
Right.
this bigger picture, swing low to swing high, I mean, that's where it's been grinding and finding support up against that 38-2. But I got to play devil's advocate, right? And so I see that we were in a pretty nice uptrend here, grinding this trend line. And then we cracked that trend line and actually retested it right there as resistance. So you've seen this longer term uptrend. We saw a crack, we saw it retest, and now we're dropping back down to support. So just tread lightly because, yeah, can you bounce off support back into the trend line? Absolutely. But if we get rejected off the trend line, form another lower high on the daily, that could lead to that descending triangle crack, and then we could start to come down into some of these previous lows near that 50% retracement. But hey, could the catalyst be, tensions in the Midwest heating up? Yeah, that could be a nice catalyst that gets this thing, maybe moving to the upside. So I would tread lightly, be positioned accordingly. Like you said, boomer bust trade. You've got some confluences. The biggest concern I have is just how much we've already been in this zone. And coming off those lower highs is the only concern I have. But I think it could be a quick little scalp. But I wouldn't really expect full follow-through just yet based on what we see at this point in time.
Yeah, I'm looking for a scalp, not necessarily a scaling out process on it. I mean, I might just if I see
Scale
get
in
the right price
and then get out. Yeah, scale in, get out. I think that's a good approach, especially a scale-in approach. Just in case it does roll and crack, if you're scaling in with light size, you can really reduce the risk on the trade. But if it's holding on up and looking good, you can add to your position, taking profit up against the 200 SMA into that downtrend, and then getting out. And then, hey, maybe there's a short back down into that zone off the trend line, off the 200 SMA, and then maybe you get that crack at that point in time, and that would be a better trade to the short side from a technical perspective. But again, this thing could have a catalyst that really starts to send it to the upside.
You know,
I
if
think
I
there
scale,
could be something there.
rip.
Do what?
I said, if I start scaling in, it's absolutely rip.
It's going to rip. Right, like Halliburton and XOM and
Exactly.
everything else. But if it doesn't rip, at least we're
Right.
protecting our assets with a capital ASS. Assets.
Yeah, I'm not looking to go longer dated options. I'm going to probably shorten it up within
60.
2 weeks, 30 days.
Yeah, I was thinking, 30 to 45 days.
All right, so maybe 30 then, 30 to
Yeah,
45.
that's what I would think. If we're looking for this to go from 44 back up to like around 50, how long did it take it last time to go from like 44 to 50? Get an idea. We got 1, 2, 3, 4, 5, 6, 7, 8. Actually, we just look at the dates. June 17th to July 19th, so a little over 30 days. So just to play it safe, maybe 30, 45 days just based on last time, how long it took, just to give us an idea on maybe the length of time to go on those options. I think 30 to 45 is a good sweet spot on this.
Cool. Thank you.
Yeah, man. 100%. I wish I could bring a little bit more to the table.
No, that helps because I
Awesome.
was looking at it from the same standpoint of those different levels. So I was seeing the same thing and just maybe adding another confluence in there.
Just to help build some confidence on that.
Yeah, and I mean, again, it's a quick scalp if I do it. It might be a quick scalp in terms of a week or two, or
What?
how long it plays out. What do you got, Stir?
Absolutely.
I heard my name.
No,
Oh, no.
Oh,
we don't
I'm,
love you that much. I mean, we love you, but
I'm watching my short play out without me. I tried 2 more times to scalp it, got stopped out for small little paper cuts, and now I'm watching it roll. So I'm just kind of like sitting on my hands, not touching it for a minute.
on ES.
Yep.
Yeah, right off that 543 gap rejection.
Yep.
Yeah, I want to see what happens off that gap rejection.
I want another attempt at 544, the actual golden pocket 38.2 on the SPY. I did
Yeah.
it to the penny from that high to that low.
Let's get
And
you a
that's-
544 hedge pressure today, Stir.
Yeah, that would be phenomenal. But if we close above this golden pocket, like continue to kind of like work up, I would expect the upside to continue a little bit.
Yeah.
But we do have an imbalance from yesterday's close to today's open that needs to get filled,
We
which is
do.
making me feel pretty good to the
Little
short side.
imbalance
But
down there. Yeah, about $1.
gotta have some reason other than that to time the top.
Absolutely.
There we go. That makes me feel better about stopping out of my short for a small basic.
Well,
That's
let's go ahead
perfect.
and give you some hedges, guys. We got a 542.50 monthly, 542.50 is your monthly hedge. And we're going to go down and find a 540 weekly hedge.
Double it and give it to the next person.
All right. And then QQQ. $462.50 monthly. Ooh, I like that. Look at that 462 monthly. That's in line with yesterday's close and high a day. I'd like to see the Qs come down to that 462.50 here. I would get long. Absolutely. Then a 460 is going to be your weekly. On the Qs. Yeah, if the Qs can pull back into that zone, the line in the sand between 462.58, 462.85, yesterday's, high a day and close, which is right at monthly hedge pressure. We come down into all this support and hold it. Yeah, I'm playing it long. Absolutely. I think we can see a little bit more upside here. But if we come down and crack all that support and back test it, oh yeah, we'll get short down the 460 weekly hedge first. So I like the Qs more than I like the SPY, so most of my focus here on QQQ today. Don't forget about crowd in maybe Airbnb. Probably not. We're in the middle of the gap. So realistically, right now, it's going to be CRWD. Maybe a gap fill long at 248.34 up to that 257.43 level. Right now, I got all my focus here on the Qs. SPY hedges. Corey wasn't listening. A monthly hedge is at 542.50. 542.50 monthly. And we got a 540 weekly? Yep, 540 weekly. All right, let's get a QQQ order typed up, ready to go here. I do like all of that lower support down there. We'll go some like 464s on that.